Welcome back to the final segment of Investing with Confidence. This week, having a great time talking about the do's, the don'ts of the financial markets, and our sponsor, Online Trading Academy, teaching people just like you how to trade and invest in the stock market, other markets, cryptocurrency, futures, Forex, options on their 25th year with that education. If you happen to miss those tickets to the investing class right here in Bloomington, you can just call 952 814 4410 or just text. And we got a lot of people that like to text these days. You can text the word invest to the number 484848. There is another step. We're going to send you a text back right away with a link, and you got to pick a date within that link. We do these during the week, also on the weekends. And one of your hosts, Al, teaches these. That good looking guy on the show here. You know what, Al? Let's continue that discussion.
I'm sorry, I didn't hear you. What did you just say?
Oh, maybe that was talking about myself. Our YouTubers know we have a face for radio.
We can't. No, we can't hide it. No.
Yeah, but that's a good thing with having this YouTube stream going live as well, as we're able to get comments and questions from our listeners too. But let's talk more about this retirement strategy and self-directing, like 401ks or self-directing an IRA, because we do have a lot of listeners that have IRAs. Maybe they already have one, or let's just say they have an old one, like an old 401k, sitting with an old employer that's just sitting there at risk in the market, and they want to be able to take that over and just kind of be able to make smart investing decisions. Hopefully, they're at the peak of their wealth building life right now,
Right.
with markets technically at all-time highs. Well, now it's important to protect that. And how you protect that is by self-directing, because I was actually having a conversation with a good friend yesterday, and she said, I've done okay in my retirement accounts, and a couple $100,000, felt like that was enough, and we talked through that, and she knew that wasn't going to be enough, so she wanted a strategy to have more, I guess, better choices during those retirement years. But she was afraid of a market crash. And the broker advisor said, we don't really have a plan for a down market. And it's kind of a concept that people have a hard time understanding, is people think markets go up forever. Well, technically they do, but your life doesn't last forever. And you have times where you're going to need that money, and you can't afford to be at that time where you need to take money out of your account and the market had already dropped. So that's why it's so important to protect that. And how you do that is by doing that yourself, because your broker's not going to protect it for you. Talk about self-directing, using options to protect portfolios, and how to do that comfortably and confidently, as we talked about in the first segment, with a plan.
Yeah, what most of our students admit when we talk to them is that their broker actually does have a concept for a down market. It's holding on and waiting for the market to come back.
I think that's the crypto term HODL, hold on for dear life.
No, that's exactly right.
Which doesn't make sense with your hard-earned money. Sometimes hundreds of thousands of dollars or even millions of dollars for some of our listeners.
Well, tell somebody that's 70 years old who just lost 40 or 50% of their retirement money, don't worry about it. It'll come back maybe in 10 or 15 years.
Yeah.
That's not the kind of comfort that you want. And even somebody who's 20, and they might say, well, I'm young. It doesn't make any difference to me because I'll be in the market for a long period of time. Every time your portfolio takes a hit, it has to work harder. It has to come back with a higher percent return than it went down just for you to break even. Let's just say, for example, that your portfolio goes down 50%. To get back to where you were before, it doesn't have to go up just 50%. It has to go up 100% for you to break even before you can start making a profit.
So what is the concept to be able to self-direct that? I mean, we want to make sure our listeners get that concept here.
Right. Well, self-directing is basically just taking control over what is yours. It's your money by having a self-directed account. Basically, it's a retirement account, or you can have just an individual broker's account. But if you want to, say, roll your 401k or 403b money into something that continues as a retirement type vehicle, you can roll it into an IRA. You're making the decisions. Now you're not paying any fees. I mentioned before that hole in a bucket. One of the holes in your bucket, in your retirement bucket, that is siphoning money out on a daily basis are fees that you're paying to somebody who's not even giving you advice. Now you can take that money, put it into a self-directed IRA where you don't have the fees, instead of just having access to mutual funds or ETFs, or basically an asset that will only benefit you if the market goes one direction and that's up. Now you have access to assets that will benefit you in all three market directions, up, down, and sideways. And just because the market's not doing anything, if it's flat, doesn't mean there aren't money-making opportunities. And there are great ways of accessing premium. Warren Buffett does this on a regular basis, and basically it's an option strategy or option strategies that you can use. But what the brokers are going to tell you, if you ask them how you're going to be protected, is they will say, well, you're diversified. So maybe you've got 50 stocks, or maybe you've got 20 mutual funds, and they're going to say, you're well spread out. But remember, those are all in the same asset family. And when the market crashes or we go into a major correction or bear market, there's a correlation between all those stocks. In other words, the great stocks get pulled down along with the bad stocks. So that there's about a 90% correlation there. You know, if you are truly protected, you have assets that are not correlated to each other. That's knowing the different asset classes like futures, Forex options, in addition to stock. And then also there is a strategy you can use with an option that essentially provides an insurance policy for your portfolio. And the other thing is that position sizing. A lot of people say that may be the most important thing that you can do is maintain that proper position sizing because you're not going to be right all the time, nor will your broker, nor will Warren Buffett. So you want to make sure that if there is a situation where you're not right, that the damage is so minimal that it really is kind of more of a shrug of the shoulders. You want to make sure that you're still in there for profit potential, but minimize the risk. And the most important component, we think, is price. It's the proper price. And when we were talking about the turtles, that's what they said too. Richard Dennis, the guy that started that turtle movement, he wanted them to follow the rules, which he talked about, avoid making decisions by following emotions or opinions, and then they're technical-based trend-following traders, which is kind of what our students really are, with the belief that price is reality. They traded price action, not news or fundamentals. So again, we're going to simplify this for you, show you how you can do this using the same strategy, no matter what you're trading, what your time frame is, identifying the most important thing as far as what's going to impact your investments, and that's price, the proper price to get in, the proper price to get out if you're wrong, and the proper price to get out if you have a profit. Let's keep it simple. Let's follow a step-by-step process, each step based on rules, which will get you to the point where you can identify a quality trade or one that's not.
Yeah, I think a lot of that, that I got out of that is people are missing out on opportunities. I mean, if you're listening right now and you say, I've missed out on all these opportunities in the markets. I haven't got into the markets. I haven't learned the skills to make smarter investing decisions. Well, now is that time because these opportunities are here. Some of these great opportunities might not be here tomorrow. So that's why you need to take advantage of these now. So call 952-814-4410 for an investing class. I'm actually going to do callers 1 through 10. So if you call right now between callers 1 through 10, you can receive 2 tickets for an investing class, but also a financial quick start kit that has topics on how to time the market, some different strategies on 401ks, IRAs, but also a cryptocurrency foundations course. You can also text the word invest to the number 484848. When you do that, you're going to get a text back with a link to register for this free class. So, Al, you were talking about options, and we were just talking on the break here. I just want to explain real quick another strategy with options is getting paid to wait. And you know who does a lot of this? Warren Buffett. A lot of the big institutions apply this strategy to either get stocks at a cheaper price, but get paid to wait for that to happen. So essentially, there's an option strategy that investors like to use where you get paid a premium. So right away, when you do the position, you get paid a premium and you just wait. And you want price to come down to a cheaper price where you are willing to buy that. Right. And you can keep that premium no matter what happens, whether you get you get that stock when it comes down to that price, or maybe it doesn't even get there. There's an opportunity to keep that premium. It's a strategy that our sponsor, Online Trading Academy, teaches, and it's really just about understanding multiple strategies. You don't have to learn them all, but learn the simple ones. Learn the ones that make sense for you based on your investment opportunities that you want to take advantage of, but also what your goals and objectives are. And now it's getting close to the end of the show. And we've had a lot of people call in. Texting is big as well, but we've had more people call in here today than I think in a long time, because people want to really talk to somebody to see what this investing class is all about. And it's 2 hours. When you call in, you'll get one of our people, one of our live people right here in Bloomington, and then you can ask questions. What's covered in this class? Why might it help you? So just call 952-814-4410 for 2 tickets for this class, or just text the word invest to the number 484848. When you do that, we're going to get you a financial quick start kit just for getting set up. And Al, we always talk about different, things that are in the market, different opportunities, the good ones, the ones that people need to avoid. And that's in some of our quick start kit, how to minimize mistakes and stuff like that. But you always have great tips. So let's hear the OTA tip of the week.
Okay. Well, here's a reality for you. When a person with money meets a person with experience, the one with experience ends up with the money, and the one with money ends up with the experience. Not necessarily a good one. So you need the proper knowledge through proper education to achieve that successful level of experience. Remember, there's someone on the opposite side of a trade from you. You want to make sure that their experience doesn't end up with your money. So learn a system, follow the rules like the turtles, give yourself the opportunity to be a consistently successful trader.
It's all about, are you the tortoise or are you the hare? The tortoise always wins. I'm so glad we talked about these turtle traders, because I think it gives a good visual on how to have longevity in the financial markets. One less set of tickets for the investing class. Call 952-814-4410 or text the word invest to the number 484848. As always, same time, same place next week. Until then, retire young, my friends.